count coming up. Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. Markets fall off day's highs and slip into the red. The Nifty fights to hold on to 10,750. Metal stocks are on the top of the losers index. And Info Edge India surges the most in over 7 months after it decides to invest in Policy Bazaar in partnership with SoftBank. And shares of shrimp maker Avanti Feeds have surged after the company issued a bonus and carried out a stock split. And Prime Minister Narendra Modi urges the Asian Infrastructure Investment Bank to invest $40 billion in India by 2020.
Well, viewers, thanks for tuning in to Countdown. My name is Neeraj Shah, and the markets have done reasonably okay for themselves. I wouldn't say they've gone gangbusters, but compared to what it was, or what the expectation was at the start of the trading day, and a fairly choppy ride as well. As you can see, you're in the red at some point of time, mid-morning as well, and went up all the way to the green at the highest point of the day, mind you, then came off and back about 0.25%. So it's been a mildly choppy ride in a very narrow range. Nevertheless, we are trading right now in the green. The Nifty Bank, though, has done precious little. Very, very flat day of trade for the Nifty Bank. Hardly any movement there. You could argue that, yes, it's bobbed in the red in the green, but the band is really, really narrow. The market breadth, the advanced decline ratio should come up on your screen before I move on to the heat map and just show you what's happening at that end. About 1:2 in favor of the decline. So that aspect hasn't been particularly great, in line with what it was when we started trade. Remember, we started trade 1:2 in favor of the declines yesterday as well. Let's wait and watch if it gets beaten down during the course of the day. And the European indices, and let's see what the global markets are doing as well, just to sense whether or not we'll have some pressure during the course of the next 1.5 hours of trade left. Remember, it's expiry week, volumes would be high. The world markets seem to be a happy place. Okay, the heat map, and let's see what's moving and what's not. Fair bit of red, I would presume, the stocks which are correcting thick and fast. So Tata Motors, another 4.5% down. Tata Steel, about a couple of percentage points. Reliance Industries is the pain point, down about 2%. And Bajaj Finance, which started off in the green, mind you, went up about 2,400, is down about 1.25%. So some bit of profit booking that's happening into Bajaj Finance as well. On the flip side, Ultratech puts on yet another display of strength, another 2.5% up in the session today. It's a good going for Ultratech. Grasim too, about a couple of percentage points higher. Bharti Airtel has had a reasonably decent session, and IT is doing fairly well for itself, I must add. TCS, Infosys, Wipro, all of them are trading marginally in the green. It's a good going for these stocks as well. The pain point, though, is Tata Motors. However, what are the stocks that you should monitor before I hand it over to Agam for what's happening in the more liquid universe? Let's try and get a sense of a couple of pockets of strength and weakness on the NSE 500, at least, the key movers of the session today, and will come up on your screen. We have stocks like Shree Cement, which has bounced back quite strongly. Avanti Feeds, you heard the management today, 17%. Remember, they're candid enough to say that profits will dip this year, but revenue growth will be seen. Info Edge, 6% higher after that acquisition that they've done, or the investment that they've done. And Shree Cement, 5.5%, rising from those 52-week lows. What about the losers? Well, Aegis Logistics, Gati, the whole logistics space is weak, and Heritage Foods continues to grind lower, down about 5% in the session today. Stocks like KRBL also in focus, but they haven't corrected too much as KRBL today, and therefore not too much. Neither has PNB Housing Finance, which is a big mover yesterday, gone up too dramatically. But Agam, what about the more liquid universe?
Around 1:30, what we saw was the markets dip into the red, and they have come back into the green right now. And it's very evident that we're starting to see rollovers come through. And that is also very evident in the kind of numbers that you see for rollovers for the Nifty, as is very apparent on your screen out there. The July number is starting to see a surge. The rollover number itself, the absolute number, also picking up at around 21%. And the case is the same for the Nifty banking futures as well. where we have seen a little bit of an uptick when it comes to the July open interest, and as a matter of fact, a decline in the June OI. The rollover number here is just a tad below what the Nifty number is. That said, we're going to see how the numbers stack up finally towards the end of the trading session. Let's pull up the wicks, and as one might expect, it is seeing a little bit of an increase there as well. That's about 1.3%, but it's not, typical of what you'd see in the expiry week. So the wicks has moved up, but it's not above the mark of 13, and that perhaps could be taken as a positive from a lot of traders who are long in the market. One option that continues to stand out in trade is, well, your 10,600 and your 10,700 put. 10,700 put specifically in this case, considering we have seen the Nifty move further away from that particular mark. And this establishes itself in terms of some of the big movers with respect to today's day of trade. Let's take a look at some of these big movers. Then we have Tech Mahindra, that's on the losing end. And we are starting to see some weakness coming through, even as rollovers pick up, and we are starting to see shorts come in. Century Textiles is the other one. Now the 21% increase in the July series. This is after discounting the fact that we've seen a decline in the June open interest, and that is where we're starting to see some longs building. We have Nestle also in focus. So Nestle again, well, this underlying has come off from day's highs, but we're still seeing considerable traction in open interest. And finally, let's pull up something like a Bharat Forge. That's where we're starting to see unwinding in the June open interest, even as the stock advances. So some shorts being covered for the June OI and some longs being made in the July OI. So let's keep an eye on some of these counters. Other than your usual suspects, which have been extremely volatile over the previous few weeks, and that would include something like a Bajaj Finserv or a Bajaj Finance.
Oh, interesting. Railway stocks, they are the focal point as well today. Remember, a fair bit of brisk activity that we've seen. Let's pull up those stocks. Titagarh Wagons up about 1%. The volumes, though, much higher. The others too have done reasonably okay. But it's not just about the now and current. It's also about what could happen over FY 18-19, because newspaper reports suggest that railways are planning to give a tender of 22,000 wagons at a cost of at least 7,000 crores in FY19. The orders would be through a reverse e-auction model, and if the lowest bidder is not able to serve the entire order, the second lowest bidder would get a chance without a fresh tendering process. How important is all of this? Let's get in. Mr. Umesh Chaudhary, he's the Vice Chairman and Managing Director of Titagarh Wagons, joins us right now on the show. Umesh, so good having you. Thank you so much for taking the time out.
Hi.
This is Neeraj here. Good afternoon.
Hi, Neeraj. Good afternoon. Always a pleasure being with you.
Thank you so much, Umesh. So what does this mean? I mean, this is what the Economic Times has reported today. How close are we to the Indian Railways putting out such a large tender out for companies like you?
So it's after a very long time that we have been waiting, and in fact I've spoken with you a number of times, and I've said that the last 4 years of the current government was capacity creation in terms of track building, track renewals, signaling upgradation, and so on and so forth. And now that they have created capacity, they need to utilize capacity for which they need to buy wagons. And I was there in the program where the Honorable Railway Minister announced that they are going to require about 100,000 wagons over the next few years. And this 22,000 wagon tender has actually been published. So this is not something which is being spoken about. This is already on paper. And I believe that this is only the beginning, because apart from the railways buying these 22,000 wagons, there is also a very, very good traction that's coming out on the private segment, private sector wagon demand. What the railways have done in the last few months, Neeraj, is, we've really seen hyperactivity that has happened in the railway board. The minister, in fact, held personally a meeting to find ways of increasing wagon production and wagon supplies. Last week, he had a meeting for almost 2 hours in his office from 8 to 10 o'clock in the night. With all the wagon industry, resolving the problems. On the spot decisions were taken, and a lot of private schemes like the wagon investment scheme and all of that were reintroduced in the last few months. So we do see that the wagon industry should really get the long awaited rebound that we've been hoping for many years now.
But okay, so Umesh, so you're saying that this is already in print and not necessarily only in the realms of discussion. Are there timelines to which the first set of orders, if it's 22,000 wagons, then that would be placed or would be out for bidding?
The 22,000 wagons are already out for bidding, Neeraj. So the tender will be opened. As of now, it is likely to be opened in July, but we expect some extension to happen because there are certain new designs, and this is a new process which is being followed by the railways for the first time, the reverse e-auction. I hope that this order should get finalized in the next maybe 3, 4, 5 months at the most.
All right, Umesh, good afternoon. This is Agam here. Also, if you could give us an idea about the number of players who are in competition for this particular tender. The reason why I ask is that, from what I understand, is that while the lowest bidder will be awarded, the tender, the second lowest bidder would also get a chance with a fresh tendering process should the first bidder not be able to come up with the entire number. That said, I just want to get a better understanding of the industry and who all else have a possibility of coming into this play.
The way the tender is finalized, or the wagon procurement historically has been a mixture of competitive pricing and your capacity. Because at the end of the day, if the railways, do not get the wagons, the loss to the railways is far higher than the money saved on account of procurement of the wagons. So it's always been a very intelligent kind of a formula that the railways have followed. And the same, in a more competitive way, is going to be followed this time. The total number of wagon manufacturers in India are about 8 to 10 manufacturers, and the total capacity as such is about assessed capacity by the railways themselves is between 24 to 30,000 wagons. I believe that the current demand of the railways, including the railways' own demand and the private sector demand, will be more than met by the existing players, by the existing capacity that is available. As far as our company itself is concerned, our assessed capacity between Titagar and our subsidiary Simco is close to 9,000 wagons a year. So we obviously have a large chunk of this assessed capacity.
Okay, and Umesh, if I'm not mistaken, your current order book stands at a little over 2,500 crores. Please correct me if I'm wrong. Where can we expect this order book to go ahead as we move into FY19?
So our order book in India is about 1,300 crores. Yes, on a consolidated basis is about 2,500 crores, is absolutely correct. If we compare on an apple-to-apple basis, this order book, which is in India now about 1,300 crores a year ago, would be one-third of this. So obviously there has been a large inflow of orders in the last few months. The execution of that will start now. So June we started execution of the railway orders and will get ramped up from the second quarter of the current financial year. I believe that the demand is quite healthy. I don't want to guess a number that we'll be able to achieve. But all I can say is that we are going to participate, and we are front runners in most of the private schemes. We are participating in all the railway wagon tenders, and we are also participating in the metro tenders. Today we saw in the newspapers that 5 new metros have been cleared by the Ministry of Urban Development. Ourselves, Titagar, along with its subsidiary Titagar Firema, are qualifying now for all the metro tenders in India under the Make in India program, and we will be participating in all the metro tenders as well.
So Umesh, let me just break this down piece by piece. This 20,000 wagons, would you bid for a larger chunk, or the largest chunk, or the entire chunk, or would companies distribute amongst themselves, because so that everybody gets a small piece of the action? How would this bidding happen?
No, we will be bidding for all our capacity and the largest chunk possible. There would not be any division between the companies because that's not possible. This is a competitive tendering, and
so you would bid for the entire 7,000 crores?
I'm sorry?
You would bid for 7,000 crores or the entire 22,000 wagons worth of the chunk? You would bid for the entire chunk?
So we will bid for the entire 22,000 wagons, Neeraj, but we would not be eligible to get the entire 22,000 wagons because it will be capped with our capacity, which is at about 10,000 wagons.
Okay, yeah, which is what I was trying to get at. Okay, so that is one piece. Two, you know, the information that we have. You had received, you and Simco both had received this bulk order, I presume, in December, 28 December 2017, if I'm not wrong. The execution of which was supposed to start from the first quarter of this year. Is all of that on track?
So absolutely it is on track. We started the execution from June. Some part of whenever we receive the orders, there is a prototype that needs to be approved, and there's a huge process of supply chain management that needs to be complied with. So we started, the ramp up will happen from the second quarter, but yes, we have started executing these orders from June.
And
both
have
from
you?
Uttekar and from Simco.
Okay. And have you received any of the orders for the metro projects that you were just telling us about?
No, we have just been qualified in one tender till now in the past. That was the Nagpur, which we lost. Now with the revised guidelines of the eligibility, standard eligibility criteria has been announced by the Government of India. This was last month in the website of the Ministry of Urban Development and Niti Aayog, I believe. In that Make in India guidelines, our company is qualifying for pretty much all the metro tenders that are coming up.
So are you, Umesh, can I ask you something candidly? FY17, your revenues were 1,700 crores. FY18, I believe they dipped to about 1,271 crores. Is there a realistic chance that your revenue numbers will show a growth in FY19 over FY18 and a meaningful growth at that?
Absolutely. I mean, there's the Indian operations. If I divide Indian and European operations, Indian operations will show a significant growth. Which is simply, you know, it's a simple extrapolation of the order book. If we look at the beginning of FY18, our order book was at about 300-400 crores. And if we look at the beginning of FY19, our order book is at about 1,300 crores. I'm talking of the Indian operations. As far as the European operations are concerned, they continue to remain under stress at this point of time because of the lack of orders. We have participated in several tenders there, and we are participating in tenders. But this is a very lofty business. You know, there is a single tender that comes for about 300-500 million euros, and then that gets executed over a period of time. We have participated in tenders. We have not been able to secure any contract as of now, but we are in active kind of activity in some of the tenders. So in terms of the revenue, overall revenue, yes, we will be able to have a significant growth in the current year. Indian operations will grow far more than the European operations.
Sorry, so are you saying that consolidated from an investor's perspective, would you nudge a number northwards of 1,500 crores?
Both I don't Indian want to give a number, but I would definitely say there will be a very decent growth over FY18 in FY19.
Okay, Umesh, we'll leave it at that. Thanks so much for joining us and giving us an update on, with respect to that, the tender the government is looking to float. Of course, for now, Tradebulls wagons is up as much as 0.7%. But there is yet another management that we want to address right now. We have Tube Investments, where the promoter entity, Ambadi Investments, has sold some stake in the company. What's the reason behind this stake sale? Let's ask L. Ramkumar, the managing director at Tube Investments. Mr. Ramkumar, good afternoon and thanks for joining us. Good. Can you tell us a little more about the reasons behind the promoter entity selling stake, and also what is the possibility that the funds realized will be plowed back into the business?
Good afternoon. I understand there has been a sale of small stake in the company in order to meet their cash flow requirements to repay some loan in the holding company. There's nothing more to it than that.
Okay, so this is not got to do with you wanting some, I mean, I believe Inam Group and you have a long-standing association, as is Mr. Ramkumar. It's not to enhance that association or any such thing.
No.
Okay.
I didn't understand your question.
But no, I was just asking if indeed Tube Investments, there are promoters or promoter entities who want certain set of investors on board as well. That's not been the criteria here. You anyways have a
No,
long-standing...
just to meet some cash flow requirements.
Okay. Well, how is business looking like? But that's anyways for the holding company, so nothing that impacts the current business. How is the business environment for all of your entities looking like, Mr. Ramkumar, currently? If you can shed some light here.
But for the bicycle business, all of them are firing very well. As you know, the rest of the businesses are all dependent on automotive, which is our metal form division and engineering division. We are seeing a very strong growth right from April. It continues now. Back on the growth of two-wheeler, four-wheeler and commercial vehicles, to which industries we supply. Shanti Gears is also doing well in the industrial segment. Bicycles has been a little sluggish. It's okay. This is the season for us, so we did maybe marginally better than last year, but still we have not seen a good pickup which we were expecting to see during the current year in bicycles. Automotive growth is very strong.
Mr. Ramkumar, if I could ask you about your capital expenditure plans for the upcoming year, what you've done over the previous couple of years, and as we move into FY19, or what are your plans there? And if you could also give us an idea about whether or not we're starting to see capital expenditure in the entire industry as well.
Yeah, actually, last year we ended with something like 230 crores of capex. This year, also we are likely to do around 200 crores plus. Largely, our capex has been to build capacities. We put up a new plant in Rajpura to make CDW tubes. There'll be a further expansion of the plant, seeing the growth in the auto industry. We are also expanding in fine blanking business, which caters to the auto industry. We're also going to expand in cold rolled steel strips, which is also largely automotive industry. So if you ask me, our capacities are reaching, really the brim in terms of engineering and chains. So we are spending in these sectors.
Interesting. Mr. Ramkumar, so is one to presume that the flattish revenue growth or the small pain that we saw on the operational metrics in FY18 would be a thing of the past? FY19 would look materially different?
It's looking good. It's the first 3 months, as you know. We've got 9 more months to go. The start is very good, actually.
But it's difficult to project what the year at large would be in a business like yours, you were saying?
We don't. As you know, automotive is pretty cyclical. But we believe that it will be strong, and FY19 should be far better than FY18.
Mr. Ramkumar, considering your engineering business, if you could tell us about the kind of traction that you're seeing on ground, because there are still some concerns with business not being able to pick up quite substantially or up to the expectations. What is your reading on ground?
The engineering business, we're doing pretty well, actually. We have fairly large market shares. We continue to increase month on month our volumes. I don't see any major concern there. We have good customers. Now that we have expanded in the north and also we are balancing our capacities in each region, we expect our market shares to go up further because we'll be supplying from the local plants rather than lugging it all the way from south or west to north. So I see no concern there. Actually, today the plants are very much taking up the challenge of higher and higher volumes every month.
All right, Mr. Ramkumar, we'll leave it at that. Thanks so much for joining us and giving us update on Tube Investments. And we'll move on to the next management then, Avanti Feeds, which has been doing very, very well in today's day of trade. Of course, do remember that we've seen, some corporate action come through. Today, the volumes are at its highest. And as it makes into a foray into the Chinese markets, we caught up with the managing director, Alluri Indra Kumar, earlier in the day. And, the hopes here are that some pickup in China moving in. But this is a slice of that conversation that we've had earlier in the day. Listen in.
Our sales have grown up, but the raw material prices have increased. You have to take the standard, not 2018-19, but you have to take 2016-17 as a base year. See, last year it was a good monsoon, so previous good monsoon was there, and last year prices of the raw material were low. So the margins were very high. We got around 20% margin last year. But on average, it is 10 to 15% is the standard margins, what we operate on. So a good year will get more benefits. But this year, raw materials have come to the same levels of almost 2016-17. So I think it would be the raw materials for the feed also are softening because again the good monsoon has started. and it would be quite interesting. It is raw materials are coming down.
Seem to be suggesting, Mr. Kumar, that we will see some impact. I'm not putting a number in your mouth, but you seem to be suggesting that there will be some impact that we'll see in Q1 itself.
Q1, yes, there is an impact on the raw material because the raw material prices have increased. Yes.
Oh,
definitely.
Sorry, you are saying that there could be a further margin impact in Q1 or downside?
Q1, it will be almost same. Around we'll be around 12% margin. Okay. Yeah, 12 to 15%.
Okay. Now, Samit Sarkar, my colleague who tracks your company very closely, made some interesting points about what the way ahead could be like. You guys, you and other companies or your peers are all increasing your focus on other global markets as well, I presume, to reduce the dependence from the US. What is that current exposure and how will it move over the course of the next 12 to 24 odd months?
The US market is the major market for the Indian shrimps, which is approximately around 60%. And comes European markets, and now the Chinese market is improving a lot because the Chinese earlier they used to export and now they become net importers. And the Chinese import of shrimps shrimp is very high, requirement is very high. The Chinese market is a new market for India. Earlier, India was exporting to Vietnam and they were reprocessing and exporting to China. But now China has become one of the major markets for India. And also the other Middle East and other markets are also opening up.
Well, the stock is up and active for sure in the session today, is Avanti Feeds. And of course, you can watch out that whole discussion on the website bloombergquint.com. So if you log into the site, you'll get to hear what the management had to say with a small story around the key highlights of that conversation as well. The stock up about 17%. FY19 will see a small dip in profits, the reported profits compared to what they've done in FY18, and then the pickup would happen well into FY20. Okay, trying to figure out what else is moving around and what else is not. Stocks which are trading at 52-week highs, aside of Avanti Feeds, include an Astral Poly, which has done reasonably well for itself, 3.5%. Godrej Consumer about 3% in trade. Bharat Financial rises about 1%. So these are 2 or 3 names which seem to be trading at new, or which are trading at new 52-week highs for themselves. Do watch out. Astral Poly continues to rise and shine from the levels that it was trading at some time back, about 350 or 400 a year and a half ago. From there, it's really gone up in trade. What's not done well, and this has to be mentioned, Future Consumer is at 46 rupees. The consensus target, if you can pull up the ANR, you will see what I'm talking about. 10 million shares traded, by the way, on Future Consumer. The consensus target, if the Bloomberg terminal is to be believed, I think comes to close to somewhere around 77, 78, because everybody from Morgan Stanley to Motilal Oswal is bullish on Future Consumer, and therefore the consensus target is way higher. What's the number? The consensus target is 80 rupees, and the stock has fallen from 60 rupees to 46 rupees. Perennially a sell side favorite, but something that continuously, I repeat, doesn't manages to disappoint any kind of investors who pile into that stock. 46 rupees would be close to 6-month lows or YTD lows or thereabouts for future consumer enterprises. And then Agam, the logistic companies certainly have fallen off in the session today. But FCEL, Agam.
Right. FCEL, let's bring that up and see what that's doing right now. At least in trade, and I'm sure that there has been a lot of traction with respect to volumes.
10 million.
Well, again, we'll have to watch out for what's really going on, because I know that Future Consumer specifically in this case has seen a very good year on year to date in terms of returns. It's just that the profitability and sometimes the volatility in margins that we see for FCCL can come into a little bit of a doubt. Do remember the original idea for Future Consumer was to be an FMCG company because of bringing in manufacturing. And that's the reason why Future Consumer was split and made into a separate unit from Future Enterprises, of course. That said, well, we're going to see how that works out right now. The other stock that I want to bring up are actually a couple of stocks, and that's Bajaj Finance and Bajaj Finserv. Well, we're looking at a substantial weakness in today's day of trade. Bajaj Finance is now down as much as nearly 2%. And well, after a few days of strength, Bajaj Finance has moved below the 14-day RSI of around 70. So now it has moved back out of the overbought zone. And the same for Bajaj Finserv. Bajaj Finserv again moving out of the range of, say, 6,100. And now it's trading below those levels. However, I'm sure a lot of these analysts out there would argue that, well, you buy these companies on dips and, well, you know, you eventually play for the long-term uptrend in the markets. But for now, we're looking at a blip in both these counters, which have been extremely strong and which continue to rise despite the fact that the markets were either declining or remain range-bound. And well, today is a day when we starting to see some profit taking coming through for both these stocks.
Well, let's get in our technical experts on board. Sacchitanand Uttekar, Deputy Vice President for Technicals at Tradebulls, joins us on the show. Amar Singh, Head of Advisory at Angel Broking, would be joining us in moments from now as well. Gentlemen, both of you, good afternoon. Thanks for joining in. Sacchitanand, let's start off with you. Optically, it looks like a flattish market. Lots of pain at the broader end of the spectrum, something that we are used to nowadays. What's the trade on any of the key indices? Are you taking a trade on the Nifty or the Nifty Bank today?
Good afternoon. In fact, rightly said, market has been consolidating for the last couple of trading sessions, and in fact, if you look at last two sessions itself, the range has been contracting. The best part is 10,700 put has been has seen a good amount of additions, and primarily it looks like the bulls are getting more confident, and the levels that we are looking at is 10,700 holding as a very good support so far. So the only ray of hope is that this particular level has been defended well despite the volatility. What we are expecting is that in case if the market starts trading above, say, 10,790 on a confident basis, and if we see a consistent close above it, then probably we may see markets surprising on the upside. But so long as the trade is concerned, I think one has to be cautiously optimistic and keep a stop loss somewhere close to 10,700 and still stay long in the market.
Okay, Amar, good afternoon to you as well. How are you approaching the benchmarks now, considering, well, consolidation continues?
Yeah, overall we are seeing consolidation, and also we are seeing sideways trading. And what we are witnessing is at higher levels are witnessing selling pressure as well as profit booking, and Nifty is unable to take out the 10,800 mark decisively and consistently sustain above that levels. Looking at the indices technically, they clearly display that the short-term trend remains, I would say, slightly bearish. So higher levels are being sold into. So Nifty futures can be looked at going short around 10,790, 10,800 levels with a stop loss above 10,860 and a target of 10,700 on the downside.
Okay, Amar, if I may ask you about the Nifty Bank as well, is there an opposing play here, or do you expect the Nifty Bank to move in tandem with the Nifty right now?
I would say looking at Bank Nifty, we do see a similar short-term pattern on Bank Nifty as well. So that's the reason Bank Nifty, if you look at Bank Nifty, it's unable to breach the 26,800 mark consistently on the upside, and we are seeing some selling pressure. And also what we are witnessing is on the downside, it does have good support around 26,200, 250. So that's the reason we are seeing this choppy trading sessions in the indices. But as I said, that the short-term trend still remains, I would say, bearish. The medium-term trend is positive, but that also the bullish momentum, which was earlier there, that's been on the decline. That's the reason higher levels are being sold into.
Right, then as we are into the final hour of trade, then let's get in some stock strategies as well. Sacchitanand, how about you? You have two plays in the financial space.
Well, absolutely, yes. In fact, this is one space where we continue to be optimistic. And if you look at both the trades, these are more on the mid-cap side. So Max Financial is one idea wherein we've already seen a strong up move in the month of April, and post that there has been a good amount of consolidation. The stock is quoting near its 78.6% retracement support of its previous impulse. And if you look at some of the momentum oscillators, they are converging now. It is indicating that the 440, 445 has been a strong support, and and the stock may break out above 480 levels soon. So with that perspective, a stop loss can be placed around 448 and long positions can be initiated in Max Financials, an initial target of around 490, which can extend up to 520 going forward. The second call is buy call in Ujjivan Finance. So if you look at the overall formation, on a daily scale, we are seeing an engulfing bullish pattern occurring at the near its 200-day exponential moving average support. So this is a very optimistic sign in a scenario wherein the indices are finding it difficult, and it gives a indication that the stock is getting ready for a move beyond 410. So with a stop loss around 376.30, longs can be initiated in Ujjivan Finance, initial target of around 410.
And what ideas are you recommending today, Amar?
Yeah, the first one is a buy on Bata, because if you look at Bata, technically the stock is very strong across different time frames. If I'm looking at the daily charts, there also the stock is very strong. The trend strength is extremely strong. So, and also if you look at Bata, it was in consolidation, unable to earlier breach the 815 mark. So that level was taken out, and currently it's trading around 840, 42 levels. So any pullback can be used in Bata as a buying opportunity, somewhere around 830, 32. That can be a very good buying opportunity, with a stop loss of 814 and a target of 867 on the upside. So that's the first one. The second one is a sell on NBCC. What we're seeing in NBCC is that this stock is in a particular very severe bear grip, and any pullback is being used as a shorting opportunity. If I look at the trends are extremely negative, and so this is a stock, any pullback towards 80, 81 can be used as a shorting opportunity, with a stop loss above 83 and a target of 75 on the downside. And the third stock is from the IT pack, that is Infosys. What we are witnessing in Infosys is that Infosys continues to hold firm, and technically it continues to be strong with a bullish momentum. And its earlier high of June 15, that was of 1291. If that's taken out, then we could see the next leg of rally in Infosys. So any pullback towards 1265 odd levels can be used as a buying opportunity, with a stop loss of 1231 and a target of 1331 on the upside.
Interesting. Some key ideas there. Let's get in a fundamental voice on the show as well. Avinash, Gorakshakar, Head of Research at Joindre Capital, joins us right now on the show. Avinash, good having you. Many thanks for joining in. Bunch of names that are in focus. Can't not help but start with Tata Motors. Big corrections now, 276. It's cheaper than what it used to be, as it continues to fall almost every single quarter. But would you go out and buy it? Or is it better to leave it alone? You don't know when will the turnabout happen. It is cheap, yes, but it's forever stayed cheap now.
No, Neeraj, I think clearly, the kind of vision plan which comes out today, I think the Tatas are going to, make some vision statement on the Tata companies over the next 5 years. So I would believe that whatever happened at the JLR meet, I think one thing is very much clear, that maybe in the next 1 or 2 quarters, some more pain could be, witnessed on the JLR side of the business. But clearly, if you look at the longer term business potential, I think JLR definitely has a very strong product lineup. They are looking at the electric vehicle, scenario also very closely. So I would believe that, if one were to take a contra call, you're getting a large company, clearly, obviously not an outperformer over the last, say, 6-12 months, it has been one of the non-performers. But if you look at the kind of, pieces which are being put in, if the cost-cutting program actually gets into action, and we could see stronger traction from the JLR numbers, especially considering the new product launches, Neeraj, I think beyond 270, 265, I think very little downside is left. The market is probably expecting the worst from the quarterly numbers. So my sense is around 265, 270, this could be a good contra bet. In fact, looking at the fact that in this market, almost every other stock in the auto space has actually multiplied and, given very strong returns. So this could be a contra bet, and I would believe that, somebody could actually bet in and put in some money here rather than actually taking a contra call, because, everybody on the street is negative. So I would believe 265, 270 could be a bottom price, and one could actually start accumulating.
So the question is not about whether this is a bottom price or no, Avinash. The question is whether from this bottom price the stock will give returns.
I think
options available in the auto space, right?
In the next,
so why Tata Motors?
In the next 1 year, Neeraj, there are chances that this stock may not perform. But if you're looking at the slightly longer term picture over the next 18-24 months, I think probably this could give a decent risk reward. Maybe in the short term, I agree with you, Neeraj, that it may not give that kind of upside. It has been a clearly been a non-performer in the last 6 to 12 months. If you compare all the auto stocks, this has been one of those stocks which has hardly performed. But looking at the fact that the management is now very serious, the chairman of the group is very serious of ensuring that profitability comes back, and severe cost-cutting measures were actually announced in the JLR analyst meet. So I would believe that yes, maybe in the next 6 to 12 months it may not be a great stock to look at from a risk-reward point of view, but slightly over the next say 2 years, I think this could be definitely a good opportunity. Considering the kind of volatility in the markets, I wouldn't be surprised that around 250, 260, there could be a lot of buying which could come in this counter.
Right, so well, Tata Motors is Avinash's fund up pick of the day, and his other fund up pick of the day is also from the automotive space, but it's an auto ancillary. Avinash, you also like GNA Axles.
Yeah, I think Agam, this is one stock which I've been recommending, quite earlier from the lower levels, and quite frankly, we like the business. They are into basically rear axle shafts, and they supply in the domestic markets to the commercial vehicle and the tractor segments. And most importantly, the export piece has been growing very well. They supply to a lot of large OEM names like Meritor, which clearly represents a large player in the Class 8 truck market. So I think overall the numbers for FY18 were very strong, a top line of 670 crores and a bottom line of almost 51 crores. We expect that this trajectory in the coming year as well as for FY90 should actually play out very strongly, and earnings growth should be in excess of at least 20 to 22%. A lot of operating leverage, in terms of capacity build-up is going to get operational in FY19. And mind you, this company is very low on debt, so that is also going to be an additional kicker for the stock in terms of earnings growth.
Okay, well, let's just stick with the IT space then. And Avinash, you just spoke about N. Chandra's vision, which is going to be coming out today as well. TCS is on the roll, and so has been, and has been as has been the case for Infosys as well. At this point in time, would you rather stick with the larger cap names such as TCS and Infosys in comparison to something like an NIT Tech or a KPIT Tech, which has also seen a lot of traction? How would you play and place yourself in this sector right now?
No, I think largely I think the comfort would be from the large caps, specifically a TCS, a Infosys, and some select mid caps like a KPIT or maybe even a Persistent Systems. I think clearly the rupee headwind is going to make earnings a little more attractive for these IT companies as we go forward. In all probability, with the dollar getting strong and the rupee getting weak, I think you could probably see a little kind of positivity in the margins of most of these IT companies. But most importantly, any positive surprises on the headwinds, especially from the US markets, could possibly mean that we could see a better kind of commentary from most of these IT majors. So clearly the the bias initially would be on the large caps and on select mid caps within the IT pack.
Okay. So let's bring up Maruti then, because Maruti is the other one where well, we've seen again a lot of traction there as well. It's currently trading at just shy of the 9,000 mark. So we're starting to see some consolidation if you consider its moves over the past 1 month, couple of months or so. But not to forget that it is one of those prospects where a lot of traders as well as investors are expecting it to move well above the mark of 10,000. It's not impossible. It's not improbable, Avinash, should be my question, that it could move up higher from these levels based on the kind of volumes that we've seen in Maruti. Will valuations concern you in this case?
No, I think Agam, in case of Maruti, I think if one were to look at buying this stock, I think one would definitely not buy it only from a year's perspective in mind. I think over the next say 2 years, the kind of penetration Indian markets present for most of the passenger car companies is extremely solid, and with most of the cars now getting into the consumption theme bracket, I would believe that Maruti definitely would deserve to get re-rated over the longer term. In the short term, valuations may look a little bit expensive, but mind you, Agam, these stocks have always traded at an expensive level, but looking at the kind of market share and the kind of balance sheet strength and the product bouquet which they enjoy, I would not be surprised that the market should obviously start looking at FY20 and beyond, and probably it's a portfolio stock, so one should not take a short-term view in case of these companies. So yes, over the next 2 years, a price of 10,000 definitely looks possible.
Okay, well, so that's your view on Maruti. Before I go in and take some technical calls, Avinash, a final word on the Bajaj Finance and Bajaj Finserv twins. I know that at this point in time the markets are perhaps a tad irrational, and this I'm putting myself based on the Bloomberg consensus, because it's well above the price target of the Bloomberg consensus for both Bajaj Finserv as well as Bajaj Finance. Would you be concerned, and would you recommend buying, and taking fresh positions in both these stocks at this point in time?
Agam, if I have these stocks, I would just hold on to them. But I think fresh buying would definitely be not advisable. I think the kind of run-up which we have seen in both these stocks, I would believe that the right strategy would be to wait for a correction. And clearly, we have seen these stocks actually moving significantly post the Q4 numbers. The management commentary has also been extremely strong. So I would believe that yes, longer-term prospects definitely look good. But in the near term, I think valuations look pretty fair to expensive. So you could possibly expect a little bit of consolidation here. And any correction should only be used as an opportunity to enter.
Okay, fair enough. Of course, Bajaj Finance is one of those where, well, over the previous 20, 30 odd days, your delivery volumes as a percentage of the total traded volumes is well below 35%. Amar, if I can take Bajaj Finance up with you right now, according to you, on a technical basis, is this one of those dips that you would buy? What is your view on Bajaj Finance, and what levels would you be keeping an eye on?
Yeah, looking at Bajaj Finance, what we are seeing is that the trend definitely remains strong. There's no doubt about it. Even the short-term trend is extremely strong. That's the reason. But what we are witnessing on the charts is that it has made a high of 2420, and on the short-term charts, that's I would say a bearish candlestick formation is there. That's I would say a shooting star formation. So that clearly reflects that on the upside 2420, the high which it has made, close to that, that's going to act as a very strong resistance now for Bajaj Finance, and we could see some consolidation in this stock. Whereas on the downside, somewhere around 2300, 2280 to 2300, that should act as an immediate support. So I would suggest that since this formation on an hourly chart will have an impact. So till the time we don't see an upside being breached, I would say the stock will go in a consolidation.
Okay. Well, the other stock I want to address is one of the top nifty gainers today, Ultratech Cement. It's advanced by another 2.5% right now. It's currently trading at around 3840 thereabouts. It's also advancing for the third straight day right now. So it's moved up from the levels of around 3640 to around, well, 3840. So it has gained around 200 points in a span of 3 odd sessions. Sacchitanand, what's your view on Ultratech Cement? Has it resumed an uptrend right now? And what would your support and resistances be when it comes to trading in this stock right now?
Well, if you look at the overall pack, after November, this is the first time when we are seeing traces of a fresh impulse getting, initiated in most of the heavyweights within the pack. Ultratech being one of them, and if you look at the recovery, the way it has moved from the levels around 3600 right up to 3800 in a span of 3 days, this is a good enough evidence that there is a trend reversal which is setting in. So probably, if one is holding this particular counter, then I think stop loss can be placed at around 3730, and long position should be held on. We're expecting that this particular recovery could stretch right up to 4000, 4100 levels in the coming weeks as well. So it's a good turnaround that we are expecting in most of the cement packs, and I think long positions should be added in this particular sector from here on.
Interesting. Avinash, you briefly probably spoke about cement already, but my question to you would be that since a bunch of stocks are trading at or close to 52-week lows, and a lot of valuations are sub what the standard average valuations would be as well in select names, would you go out and choose the larger capacities because they might be the first ones to bounce up, or would you go out to choose some of the mid-sized cement names and regional players because their valuations would be a lot better than what some of the larger ones would be available at currently?
No, I think I would definitely go on the regional names. Yeah, something like the south-based names like Ramco Cement. Where I would believe that cement prices are now likely to move up. I mean, we've already heard cement prices moving up in north. So south could possibly be the next pocket where some amount of pricing gains could come in. And Ramco definitely trades at fair to reasonably good attractive valuations. And if you see the kind of balance sheet, they are not very highly leveraged. Profitability has been good, and the markets they cover, I think they compete with with India Cement. So I think they cover markets like Andhra, Telangana, most of these markets, where I would believe that the supply side pressure has now got comparatively, reduced. So clearly an Ultratech definitely would, obviously benefit because of their overall geographical reach. But valuations are not extremely cheap. Today the stock is up because of the news flow from the JP asset, deal, possibly buying out those assets. But if you see the kind of funding which they have done, it has largely come out debt funding. So clearly I would believe that Ultratech, somebody who holds on can hold on, but fresh buying could not give you the kind of risk reward possibly a Ramco or maybe even a India Cement could give. India Cements has also been battered down very badly.
It's forever stayed cheap, right? Again, it's like a Tata Motors thing, Avinash. India Cements EV per ton never goes up above a particular level. It's always stayed cheap. It's been one of the cheapest large cement capacities now for the last 10 years.
No, in fact, India Cements had a problem earlier due to excessive debt on the balance sheet. And sure. Neeraj, mind you, cement is a play purely on price. So when prices move, these guys have got large capacities built in.
This is not a view. My question is not on your view, but generally I'm saying India Cements perennially, because it has a large capacity. So when you talk about large capacity names, it comes up, but it always stays cheap. The EV per ton is always cheap.
No, I think, in case of India Cements, there have been a lot of management issues, in terms of, clearly the kind of debt on the balance sheet. They had investments in, the cricket team. So, I mean, those were investments which actually did not result in any productive returns. So, I think the markets were not happy with the profitability. But in case of Ramco, I would believe that, even at this price, probably, one could definitely expect a decent risk reward. Ultratech, mind you, in terms of the capacity, they are gobbling up assets as fast as they can. And that seems to be the management strategy, to take market share and then look at volume growth rather than, price improvement.
Okay, let's pull up Coal India right now, because over the last 1 month, it has come off from around the levels of well over 300 to currently trading at around 265. I'm looking at the numbers here, and over the last 3 odd weeks, there may be 3 or 4 days when Coal India must have inched up higher. Other than that, we've seen a continuous down move on this one. It's, as I said, at around 265. So we're likely seeing some amount of covering of shorts. But Sacchitanand, how does Coal India look to you right now? If could one take and use this opportunity of an uptick to go short at this point in time, and what levels to keep in mind?
Well, if you look at the structure, I think the structure is weak. In fact, it is placed at an important, support level, and the way it has responded to that support level, yes, there is a meaningful bounce back that we are witnessing. But I think overall, this particular bounce back may fizzle out somewhere close to 268, 270. I think that will be a right level where one can create some short positions. But as of now, I think, I should give it a pass, because the support has been respected well, and the stock is bouncing back well. So I think a reversal formation somewhere close to 268, 270 zone would be a good enough evidence to go short again, but longs should definitely be avoided in the stock.
Okay. Have we spoken to Avinash about the great future consumer enterprises? Avinash, 46 rupees, the sell side darling, average target price of 80 rupees. Some of the brokerages have target price of about 87, 90 rupees, and the stock has just gone one way, and that is down. Whenever Motilal came out with the report, the stock went up to 60, came off. Morgan Stanley came out with a note, went up to 60, came off. Somebody else came out with a note, went up to 60, came off. Currently now it's really come up to 46. It's in a dire need of some more brokerage notes to come out. What's happening with this stock? Why are people shunning it, despite the fact that the promises about the revenue growth top line are fairly large?
The promises are definitely large, but even if you see the kind of price of 46 or 50 odd rupees, Neeraj, in terms of valuations, it's not cheap. So,
it's not cheap, is it?
It's not cheap. I mean, earlier, on EV by EBITDA or maybe EV by sales, whatever parameter, were used. I would believe that in these kind of companies, Neeraj, unless you have a 2 to 3 year kind of, timeline, it's not going to make money for you in the short term. This stock had actually run up also very fast. In fact, the entire future group stocks had run up quite significantly. and these were the darlings of most of the traders and most of the guys who used to play on the F&O side. So I would believe that the business is still there, the visibility is still there, but somebody who's probably buying the stock for a 6-month or a 12-month horizon may not find the kind of earnings growth which might come in a little later. I think clearly the business opportunity is huge, as you rightly pointed out, but somebody who's looking at a 2-year plus kind of horizon at around 40 to 45 rupees, Neeraj, I think there's great value in it, provided the timeline at least is longer. I would not be surprised that over the next 6 to 12 months, maybe the stock may just remain range bound.
Okay, let me throw a googly at you. Motherson Sumi at 52-week lows, Bharat Forge at the levels that it is at, if you had to buy one, and why?
I would buy Bharat Forge simply because we believe that from the domestic side, they are very well positioned on the commercial vehicle side. Very strong order book on the oil and gas segment. Also, they've got large orders which are going to be, going to see incremental top line coming in FY19. And mind you, on the Class 8 truck market, they are one of the large players in the, rear axle as well as the front axle beam market. So I think clearly the stock has corrected significantly from highs of around 750 odd to roughly about 610, 620 levels. So I think somebody who's looking at the next 12 to 15 months, this is a safe business, very strong EBITDA margins, very, less leverage on the balance sheet, and most importantly, in the fourth quarter, they provided for 150 odd crores as a one-time loss for investments. Now, that loss is not going to come in. So I think if you see the fourth quarter profit, actually it was in excess of 230, 240 crores. But what was reported was 130 odd or 125 odd crores. So our sense is that despite the fact that valuations may look a little bit stretched as of now, over the next 12-15 months, this could be a good kind of bet on the auto sector, and our sense is both the CV as well as the Class 8 truck market, Neeraj, are going to see very strong growth even for FY19. So that possibly will rub off on players like Bharat Forge.
Okay, well, Avinash, we leave it at that. Thank you so much for joining us and giving us your views on the markets and some of those stocks that we had discussed. We will slip into a short break, but before we do that, let's listen to Chakri Lokapriya of TCG Asset Management, who says that the corrections in certain pockets of the markets are overdone, and why he also feels that Tata Steel is an attractive bet. This is a slice of that conversation.
At the time of the budget, the concerns were that it was just India. Now, post that, of course, trade wars have started, and also alongside, Indian demand has not picked up. If you looked at the corporate earnings contribution towards tax collections has fallen short. If you look, GST collections are likely to fall short. Current account deficit has widened way remarkably higher than earlier estimates. So against this backdrop, your rupee has fallen. It's hurt various industries. So from this level, I think some of the correction is overdone in some pockets. For instance, if you look at construction companies, they're all down between 20-25%. More, they're trading at about 10 times PE. For a very strong earnings growth still for the next visible earnings growth for the next 12 months to 12 to 24 months. On the other hand, metals, they are impacted because of trade wars, etc. But again, they've also corrected. So yes, there are pockets of growth, and we're putting to money work there.
What about some of the metal counters? What do you make of it? Globally, yesterday we saw most of the global metal counters were down in trade. Again, the trade war impact, and some of the valuations have come in attractive range. Would you venture out into the metal space, or you believe that it's more of a cyclical industry and it's peaked out?
Metal stocks have corrected, and cyclically they have. It's unlikely that they have peaked out. There's still more growth to come. Okay. And because US is strong, Europe is just recovering. The new uncertainty is whether the trade war becomes a real trade war. It's not a trade war yet. And so against this backdrop, stocks have corrected 50-20%. They're down in single-digit multiples. And if you look at selective companies, for example, Jindal Steel and Power is largely domestic steel consumption, meetings, and therefore power demand. And also, so that company is corrected a lot. Tata Steel has corrected, way to Hindalco has corrected. So these stocks, which are large, liquid, and are available at attractive valuations, is where to go, I think.
What about Tata Steel in particular? Let's say this entire thing with ThyssenKrupp fails to take off because there are a lot of concern. It can go, it can't go. Then what happens to Tata Steel? Is that a big risk that they're running because they've already acquired Bhushan now? And the debt that they wanted to transfer to the JV, that will not happen. Will that be a big problem for Tata Steel?
It's unlikely, because Tata Steel has, gone through these acquisition cycles several times in the past. And so you have to give benefit of doubt that they would be able to successfully integrate as well as pare down debt. And also, if you look at capacity utilizations for steel, are running at fairly high levels. Demand is strong, and therefore the pricing, irrespective of trade wars, is likely to be strong for the next couple of years. So that has been factored into the paying down of the Bhushan Steel debt. So from that perspective, Tata Steel looks good post what's corrected recently.
Interesting. What have you made of this whole saga on ICICI Bank? Now, of course, there is new developments that have come out yesterday as well. The news flow will just continue to come on, Chakri, on this one. What does somebody who likes the valuations do? Bide his time or take a plunge?
Indeed, the news flow is unfortunately likely to continue. And unfortunately, I think it's time to start dipping in and buy ICICI Bank. This is a large bank which has both retail and corporate presence. Management issues are now well known, and now the latest SEBI one is expanding the so-called investigation into dozens of companies into which. Now this kind of a thing is not good for the economy, is not good for the banking sector in general, which I'm sure at some point will, because the bank in itself, the ICICI Bank, its board, has been fairly open in terms of that they're ordering one probe after the other, internal investigations. But yes, news flow is going to be this, but I would selectively start adding it in tranches because it does offer value at current prices.
Interesting. Have you looked at the business of KRBL? Have you looked at all that's happening in the recent past?
And unfortunately, I've stayed away from the stock and I don't know much about
it. You don't know much about it. Never mind. What about the globally impacted stocks, Motherson Sumi, for example? I mean, what's ailing this one?
Motherson Sumi is clearly the potential of trade wars impacting in it. They have significant presence with all the major European manufacturers, and now if it's going to lead to some amount of business disruption for its to whom it supplies to, for example, Harley Davidson is not, of course, a supplier, but is moving factories to Europe. So some of the car manufacturer guys would also do so to the US. So again, I think this trend until it settles down, but I think it does offer, beginning to offer a fairly, you can start nibble at the stock.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
back with countdown right here on Bloomberg Quint. 26 minutes left for the markets to shut, and we're trading reasonably okay for ourselves. Let's just bring up some stocks which are trading either significantly off the day's low or some points away from the highs that they've clocked in. So these are the stocks which are off the day's highs. Tata Motors, from wherever it was, it's down 3.5%. Reliance, of course, has been under pressure. Bajaj Finance is the interesting one. It's down about 1.5%, but it did clock in some highs. The day's high was 2419. It's off about 2.5% from those levels, as are Lupin and Tech Mahindra. From stocks which are significantly off from the lows of the day and the lows that they clocked in, Grasim, 4% of the day's lows. And these are, remember, index names. All that we're showing right now. Infratel, Hindalco, Coal India, Vedanta. So some traction within the commodity space for sure, Agam.
Right. Well, there you have it. And the Nifty, for that matter, is also trading near day's highs, in and out of the level of 10,800. So there you have it. Actually, just come off in the last few minutes, I'd say. The Sensex, of course, trading steadily at around 35,500, and the Nifty Bank as well, largely flattish. That said, there are certain stocks that are doing well in trade today, and we have Yash Upadhyay, as usual, joining us to give us a list of the fabulous 4 stocks of the day. Yash, good afternoon.
Good afternoon, Agam. So the first stock on our list, that is Info Edge. Now this one had gained more than 10% today after the company said that it has signed an agreement with investment giant SoftBank to jointly invest close to $90 million in online insurance company Policy Bazaar. Now with this transaction, the company's total stake in the company increases up to 12%, and the brokerages, they seem to like it and have given it a big thumbs up. United Spirits is up about 4% today after the company acquired an additional 26% stake in online payments company Hibbar in an all-cash deal worth close to 27 crore rupees. A big order win for JMC Projects. This one's up 5% today after the company said that it has received multiple orders worth close to 2,000 crore rupees. Now the orders, they belong to its water and building segment, and on the back of these order wins, the management has guided for a 15 to 20% earnings growth in FY19. Finally, we are also looking at Godrej Consumers. This one had hit an all-time high in today's trading session of about 1,198. Volumes too trading in at higher than the 20-day moving average. Back to you.
Okay. Well, thanks a lot for that. Interesting trends. United Spirits should come up on the screen, and it's a very interesting last few days for these consumption names. Up one day, down the next, and then up again. United Spirits in the session today, up about 4.5%. Before we dwell on the fundamentals, Amar Singh, a view on United Spirits, and if somebody can take a trade, because it's very, very choppy, very volatile on a weekly or a monthly basis.
But I would say that the trend definitely remains positive for this stock from a medium term as well as the long term trend. Yes, sideways it was on the daily charts, it was trading sideways, and it did breach almost 650 levels. Currently it's around 704. So yes, it's a buying opportunity in this particular counter. One can buy with a stop loss below 680 and a target of 740 on the upside.
All right. Well, the other stock which has been on the losing end is UPL. And we have seen a lot of weakness over the previous few days for United Phosphorus. It was struggling to stay in the green today, albeit it is trading higher by about 0.7% as of now. But there has been a lot of volatility in UPL. We also have a query, a viewer query on UPL. Sacchitanand, how would you approach UPL right now? That is United Phosphorus. What would your view be here?
Well, last week on your show itself, we had an opinion that the stock could be sold somewhere close to 686 was the level. We were expecting a move towards 648, and the stock has been grinding lower. If you look at last couple of days activity, the momentum has not been that severe. So probably it is trying to find a base somewhere close to 630, 625 zone, and probably the stock may start consolidating near to this particular zone. But as of now, I think the trend remains weak. Momentum has dried out, so probably the stock may start consolidating within this particular narrow range in the immediate future, 620 being a strong support.
Interesting. Okay, let's get in. Devang Mehta is Director of Equities at Centrum Wealth Management, joining us right now on the show. Devang, good having you. Good afternoon. Thanks so much for joining in. There is some bit of uptick that we're seeing within the consumption names yet again, Devang. Godrej Consumer 3% higher, trading at fresh highs. Nestle India comfortably above the 10,000 mark. at new highs. The expensive consumption names keep on getting expensive. We're not seeing that trend in some of the others, but consumption is that one point wherein people are continuously putting in money.
Afternoon, Neeraj. Thanks for having me on the show. In fact, this is the tagline that I've been using in the last, in fact, couple of years, that it's only the market where expensive is getting more expensive, and that is becoming more and more obvious now that wherever there is volume growth, wherever there is margin expansion, wherever there is an earnings growth trajectory which is quite visible, and a case of maybe under promise and higher delivery in terms of good quality stocks, that the name you took. I think these are all spaces that one wants to sort of, I can say, not hide behind, but flows are necessarily coming into these places. There is already a polarization in the market where your so-called great stocks which have not delivered on earnings because of a little bit of margin of error, the money is being taken out from the table over there and again put here to work in this consumption names. And so again, I'll maintain that this all expensive names would tend to get a little more expensive so far as there is no earnings disappointment in this type of stocks.
Devang, good afternoon. This is Agam here. So I take it that you would not recommend going long or say buying, putting in fresh investments in the stocks which are already advancing, considering you are suggesting that valuations are still high.
Afternoon, Agam. In fact, no, we have been sort of advising clients, in fact, to buy this type of stock. So, of course, valuation concerns will always be there for quality, so-called great stocks. But here is already one more thing that you get is a good night's sleep. Where you know that though valuations are expensive, but the business is delivering on the numbers as well as the brand and the pricing power for this type of businesses. There should be a premium attached to it, and so we in fact are constructing our portfolios more so in the consumption names, more so in the private banks, again certain building material space and autos, none of which are in fact cheap. So the cheaper stocks are already right now, if you can say, are maybe more of a value trap rather than value buy. So expensive is where in fact we are also present in the same space. Of course, you have to just phase out your earnings, and I'm not saying that buy at every rise. You have to sort of plan out your investments in tranches whenever there is even a smaller fall in such names.
Do you track Astral Poly as a company, Devang? It's arguably fundamentally a very sound company, a leader in its pack, nudging new highs today.
No, not any coverage here, Neeraj, and again.
Okay.
No
Any thoughts on Nestle, for example? Again, since you're talking on this expensive theme, I mean, why should an investor try and own Nestle now at these valuations?
Again, there is a clear-cut competitive advantage in terms of the product which we talk about. It's sort of a category where very few people can sort of have that type of pricing power, or if I can say brands like Nescafe or a Maggi or such type which are sort of linked to that category itself. So the 2-minute noodles is more or less attached since time immemorial to something like Maggi, and a coffee always is called a Nescafe, or nowadays even a cappuccino. But this is the type of branding power that it enjoys, and after a couple of dismal years where the growth was not very visible, I think there is a clear wave of even urbanization which is happening, that the rural areas or the semi-urban areas are also sort of seeing that sort of volume growth which Nestle would have never seen if we talk 5-7 years back. So I think that also is coming to the fore, where a lot of rural plays are also getting more and more, I can say, aspirational in terms of consuming such brands. So that's also adding a bit of I can say zing to the stock. Again, not saying that it's cheap. It's of course very expensive. You need to be a little careful while buying expensive stock. But again, as I said, there is again a safety net that which protects you in times when there are earnings which are not coming in other companies.
Devang, I believe you are very positive and constructive on the automotive space. Let's talk about commercial vehicles specifically. Today, we are seeing substantial weakness in Tata Motors, and it has continued to move down forward. Do you think this is an opportunity to move into something like a Tata Motors? And if it's not Tata Motors, what are the other names that come into your mind which are a good play in the commercial vehicles segment?
So of course I've never been a fan of the stock that you said, and because the most of the exposure comes from the global businesses of JLR, so a lot of dependency on the US, European or the Chinese operations, which adds a lot of I can say volatility to earnings, where Indian business is just a 5 to 10% of the part of the overall revenue. So not a big fan there, but of course the classic bets come from the passenger vehicle story in India, where Maruti sells approximately say 1,60,000, 1,70,000 cars per month, and there is enough and more demand which comes on track, and 51% market share is in fact unheard of in any type of a geography. In Korea, Hyundai has roughly some 24 to 25% market share, so this is unheard of. So I think again here there is more of a, I can say, oligopolistic situation, which more and more investors wanting to have India's passenger car vehicle would own Maruti. Again, not recommending, but I'm just trying to make a point. So these are types of businesses in the passenger car vehicle. And to answer your question about commercial vehicles also, I think we have seen a distinct demand coming back in terms of infrastructure demand, or in terms of more demand for I can say carrier of goods. So all such companies which are very cyclical, and that there comes a time in another 5 years where you find the stocks attractive on the back of economic recovery. So I think we are seeing that type of a cycle right now. So overall as a sector, of course, the passenger vehicles come first, followed by tractors and commercial vehicles, which sort of are showing great numbers in the last 2-3 quarters. So 20-25% was the growth that we saw among the Ashok Leylands of the world also in the last couple of quarters.
Okay, interesting. Let's wait and watch if indeed there is some traction come back into the CV space. For a while now, CVs used to be the lead indicator for the economy. Could this time be different? That's something that is an interesting topic to discuss on some other day. But last 15 minutes of trade left, can't get into that. Let's first get into what dealing rooms are recommending in the session today. Darshan Mehta and Yatin Mota are here with their channel checks. It's a tongue twister for me every time. But gentlemen, good afternoon, both of you. Darshan, let's start with you first.
Yeah, so one of the counters, Neeraj, which is doing extremely well in today's trade is United Spirits. It's up almost 4%. Some of the FIIs are active in the counter. Also yesterday, this corporate development came in terms of they took stake in one of the apps that does a lot of payment as well as delivery. So that's something that dealers are also talking about. So United Spirits is one of the counters that's been spoken about. The other one is Maruti. Hasn't moved that much. It's up almost 1.6%. Has been in a range of 8,800 to 9,000 over the past few days. But some of the domestic funds are accumulating Maruti. They've kept a lot of room to average. They believe that there could be much more movement. And Delta Corp is down 2%. There's a buzz of a potential corporate announcement that could come in, and that's something that dealers have kept on their radar this time around. But Yatin, what are you hearing?
If you look at the dealing rooms, clearly, a lot of consolidation happening in the metal space. The Tata Steel is one thing wherein dealers are indicating that there are sell flows. So STBT is something that they are recommending, which is a sell today, buy tomorrow kind of a strategy. Stock is down 2% on good volumes, mind you. So Tata Steel is one stock wherein dealers are expecting weakness. Apart from Tata Steel, do watch out for Dish TV. Recently, they concluded the open offer. Stock has been stable in the range of 70 to 75, and dealers are of the view that domestic funds are said to be buyers at lower levels. And finally, in the cash segment, there are a few stocks to talk about, including India Bull Real Estate, wherein HNIs are said to be sellers in trade. The stock is down almost 4%, has been correcting from levels of 200, so a significant correction as far as this real estate player is concerned.
Okay, well, India Bulls Realty as well in focus. Yatin, thanks for bringing us those details as to what the dealing rooms are telling us and telling their clients as well. But Devang, what is your approach to the metal pack? Let's talk about the ferrous side of things, specifically something like a Tata Steel. What's going on here, and how would you approach this one? And if you have, well, your views on something like a Hindalco and Vedanta from the non-ferrous side as well, how would you go ahead and deal with some of these companies now?
So here, Agam, we are a little tactical in our approach. Of course, as you rightly said, on the non-ferrous side, there has been certain good developments that the global arena has again come back favoring the metal space as such a global recovery, if at all it is taking shape, then I think metals are normally a prime beneficiary. So of course we play our cyclical stuff in a way that we sort of try and get out a little more faster than anticipated, but that's a really difficult call to take. So I wouldn't suggest any sort of investment bets here. Of course, as you rightly said, on the ferrous side, where Tata Steel also has a lot of global volatility to deal with. So not a conviction trade here. As I said, you need to be a little more smarter and ahead of the curve to get into metal and get out faster than what the crowd gets out. So again, no trades here. We had taken over some of the calls. Mostly we have booked our profits and we are out of those trades. So as I said, a little more of consumption or banks or those type of waves are a little more visible in our portfolio construction, rather than getting into the purely cyclical space, which can probably prove you sort of elusive in the current times where there is a lot of volatility in the market as well.
Interesting. Devang, stay on. It's last 11 minutes of trade left. I think we should get in some closing strategies and some checks on some of the commodity names as well. So we'll do both with both Sacchitanand as well as Amar. But let's first get in the closing strategies. So Sacchitanand, I'll come to you first. One top closing strategy from your end.
Well, I'm liking Voltas, the way it has reacted from day's low, and the way some of the parameters are placed right now. I think there's a good amount of evidence saying that this particular move can extend right up to say 540, 542 levels. A stop loss should be placed somewhere close to 522. The stock is quoting around 529 right now, so it's a BTSD candidate for me. Stop loss of 522 and an upside target of around 542.
Interesting. Amar, what about you? Your top closing strategy?
I would say that Tata Steel continues to remain weak. So any pullback towards 554, 55 levels can be used as a shorting opportunity with a stop loss of 568 and a target of 530 in the short term.
Wow. Since you're talking commodities, maybe I can come to you, Amar. While these stocks have come off, the metal names, cement has made a strong bounce today. Ultratech. And since we are talking Ultratech, I'll ask you Grasim as well, which is the top gainer today. What are your thoughts on both of these names?
Yeah, looking at Grasim, what we are seeing is that it has formed a base and it has taken some very strong support around 1,000 odd levels. And if you look at it technically, the stock was in a sell side from almost 1,200 levels. 1,200 levels it has been correcting. And it has formed some base, and long term, if I look at it from a very long term perspective, the trend remains positive. So what it effectively means is that 1,000 around 980, 1,000 levels is going to act as very strong support zone for Grasim, and the stock could go in for some consolidation. And since the short term as well as the intermediate term trend remains down, so it effectively means is that on the upside again 1,060, 1,080. That should act as an immediate level of resistance. So this stock is now going into a consolidation phase. Talking about the other stock which you mentioned, Ultratech, what I see in Ultratech is that if you look at all the cement stocks, be it ACC, be it India Cement, all these stocks have bounced back. Primarily, they are taking some very strong support levels. If you look at Ultratech, it has got very strong support somewhere in the region of 3550, 3560 from where it has bounced back. And technically also, if you look at the charts, it was clearly displaying, I would say, bullish divergence on the charts, because the prices were making new lows, but the indicators were not. So that reflects that towards the support level. So this is more of short covering. What we'll have to watch the 900 levels, then there is a possibility of the stock rallying towards 3950 to 4,000 levels. So I would say that one needs to be slightly cautious. But yes, it clearly appears that the downside for the cement stocks is over, and the cement stocks are more or less forming a bottom.
All right. Okay, let's pull up Motherson Sumi now. Out of the last 8 sessions, there has only been one session in which Motherson Sumi has advanced. Over the last 8 sessions, Motherson Sumi has come off the levels of 313 down to wherever it's trading at, around 240 odd levels. So there has been substantial amount of weakness, and as many traders and investors would suggest, perhaps there's some more weakness in store for Motherson Sumi from these levels as well. Sacchitanand, can you come in on this one? Would you agree that Motherson Sumi can see further downside from these levels? And where are the supports and the resistances that you're keeping an eye on this particular counter?
Well, if you look at the broader structure, the stock had been in a perical uptrend, and in fact, in the last couple of months, the way it has been sliding down, 300 was a very critical juncture, and the way the stock breached below that particular level, it really looks like there's a head and shoulder formation which is getting developed on the weekly scale, which is indicating a price target somewhere close to 240. So from a medium term perspective, I think 300 remains as a very strong resistance for the stock, and I think the way indicators are placed, we may see the stock sliding further towards 240 levels, which the pattern is indicating.
Okay, stocks which are off have gained quite a bit in the last few minutes of trade. Prestige Estates, look at that stock glow. It's up about 9%, up about 3% in the last 15-20 odd minutes, but a big surge out there in Prestige Estates. Inox Wind has had some surge. I was just talking about Aditya Birla Fashion being at 52-week lows. It's bounced back remarkably from there, 142 or 143 today. So big surge out there in Aditya Birla Fashion as well. KRBL incidentally has gained. Let me try my luck. Devang, do you track the rice companies and KRBL in particular?
Again, not coverage, no coverage here. As I said, no individual stocks. But okay. Of course, there has been a last couple of days we have seen a good fall here.
Okay, fair call. Okay, my last question, Devang. Then we are seeing some upticks in real estate as a pocket. Mumbai-based, at least. Actually, no, metro-based. Prestige, Suntech, a clutch of others have done reasonably well for themselves. Are you guys buying into real estate names?
I think clearly, Neeraj, this seems to be an interesting space. Of course, we have not bought it so far. The disclaimer would be that. But it's worth looking at, and why I say that, because post the Real Estate Regulation Act, there has been a lot of consolidation in this industry. That is what I am hearing. And the prices of residential property in certain pockets have started to at least show a bit of uptick. And there is some demand which seems to be visible, at least in this year, where there is a lot of spending on the infrastructure side as well as on the real estate side. Also, there has been a lull since last 3-4 years, which seems to be sort of now clearing out. So I think this space seems interesting, as you rightly said, from the metro side of it, from the Mumbai based, from the Bangalore based guys. There can be a couple of candidates which should be ideally looked into.
All right, Devang, well, with that, we leave it at that. I want to thank you for taking the time out and joining us and sharing your views with us and our viewers. That said, let's also take a look at some of those key movers in today's day of trade. I also want to address what's happening with Prestige Estates, because that's also up and about. Another 9% added here, and there is a lot of strength coming in through. Amar, are you tracking Prestige Estates currently at around 281 odd levels? Would you hazard a guess and perhaps give us resistances and supports for Prestige Estates at this point in time?
Yeah, overall, looking at this particular counter, if I look at it, on the short-term charts, it was in consolidation on the downside, 260, and on the upside, close to 290. So it did make a high of 290 and then corrected all the way to 250, and it's around up today 280, 82 levels. So the short-term trend for the stock remains positive, and on the long-term charts, it was clearly displaying that there is very strong support zone on the lower side. So definitely one can say that the bottom has been formed for Prestige Estate, 220, which was roughly the low for this particular stock, and the stock could bounce back. But yes, as I said, trading consistently above 295, 300 is what is required for the stock for any significant up move.
Okay, Amar, Sacchitanand, I requested you hold on and just a bit. We just have about 2.5 minutes left to go for markets to shut. So I'm going to toss it over to Neeraj, and he'll take us through how the benchmark indices, along with the broader market indices, have panned out in trade today.
Yeah, well, and Agam will drop in for that as well. But flat as flat can be, which is probably not bad. This morning we thought that there would be at least a 0.5% downtick and it could stay that way. But we're doing reasonably okay. The mid caps and the small caps, while the market breadth is poor, and which is showing in the small cap space, but mind you, the mid caps haven't corrected the way they corrected yesterday, which is actually a very good sign. Let's talk about what's happening in the large cap space, and then Agam will bring you up to speed with what's happening at the mid cap end of the market. Individual names on the Nifty, Grasim about 3% higher, good going there. Coal India has done okay. Ultratech Cement down up about a couple of percentage points. There is strength in TCS today, strength in Bharti today, HDFC some strength. So these would be the names which would be amongst the top contributors to the index in the session today. What's lost out, continues to grind lower, is Tata Motors. Reliance today is amongst the principal drags, 2.5%. It would be the top contributor on the Nifty today. On the downside, Bajaj Finserv has taken a bit of a pause here. Mahindra & Mahindra is down today, and Pharma seems to be having a slightly tough day. Cipla, Lupin, Dr. Reddy's, all of them have traded slightly weak in trade. What about the mid caps though? Individual names correcting because the small cap index is down about 1%. Agam, what are you spotting?
Well, Neeraj, you've already mentioned that the small cap and the mid cap indices have clearly underperformed the benchmark indices, the major ones. But I'm going to start off with some of the gainers in today's job trade. Let's start off with Avanti Feed, and that has seen a surge in volumes in general. It's up as much as 16% along with the stock, which has opened very strongly, and it has remained and traded around the same levels. The next one is, of course, Prestige Estates. We were just talking about this stock as well. This one has seen a steady rise through the course of the day, and it seems it's going to close around the levels of well over 280 odd, up as much as 9% right now. Hexaware from the Nifty mid-cap IT space is where we are seeing some surge again in the last 1 hour of trade, specifically now at around 468 odd levels. On the losing end, we have Future Consumer. That's down and out for now. It is seeing it. Actually, we've seen a sharp surge in the last 1 minute, as a matter of fact. So there has been some buying coming along. I'm not sure if that's a freak trade, but well, it was quite weak throughout the course of the day. We have Take Solutions as well, again from the mid-cap IT space, but this time on the losing end, at his continued to grind lower, down by as much as 7%. And IDBI Bank is the final one from the PSU banking space. Again, it's lost out essentially in the second half of the session, down and out by as much as 6%. So plenty of stocks out there that are seeing some amount of weakness. And overall, when it comes to the advanced decline ratio, that is again a matter of concern, at least in the near term, Neeraj.
Certainly, Agam, that's well summed up really what's happened in the markets today. It's flat as flat can be if you just look at the benchmark indices. For the benefit of our viewers who are tuning in right now and thinking what the world markets are up to, let's get them up first before we dissect what's happened individually. As we've shut shop, the world markets seem to be doing reasonably okay. 0.5% apiece for FTSE and the CAC. The DAX about 1/3%. So no great disruptions seen if you are indeed on the long side. But, and the Dow futures will also come up on your screen. I would reckon that there would be a flattish to a marginally positive trade. No, maybe a marginally negative trade, but a flat trade, you would have to say. However, the contributors, the volumes, the market breadth, all of them will come up on your screen. Agam, the volumes would be interesting. This is the contributors first. Yeah, Reliance is right up there. But IT's given some bit of support today. I think not just TCS, a couple of others were also in the green.
There were, as a matter of fact, but along with Hexaware and something like an NIT Technologies. But of course, as you said, it is essentially the two IT companies along with HDFC and Maruti providing the big strength, keeping the indices buoyant. You know, you were talking about the turnovers, and because we are in expiry week, let's bring up the turnovers as well. Now, when it comes to the cash markets, it's nothing out of the ordinary. Around 130, the number stood around 15,000 crores for NSE and currently at 26,000 crores. This again, if you consider that we are in an expiry week for NSE F&O, the turnover looks normal, looks average at around 9.3 lakh crores. Of course, not too much to speak for when it comes to the BSE cash, but if you add both of them, it'll be just shy of the 30,000 mark. So on the whole, very, very average turnovers in today's job trade. At some might say it's been a quiet day, considering we've seen both the indices, the Nifty as well as Sensex, trade flat. That said, if we could bring out the advanced decline ratio as well, which remains a matter of concern. And it began the day with some amount of volatility, but eventually 2 losers for 1 gainer approximately, and as has been the case over the previous few days as well, Neeraj.
At some point of time, people will start seeing some value in the broader end of the spectrum as well. The punishment is over pessimism right now. The market breadth has looked like this for almost every single day the last few days that I can remember. So the breadth is terrible, to be honest. Well, let's wait and watch what happens there. Final thoughts then from our experts. Sacchitanand, we'll come to you first. How does this set us up for the next 2 days? Because I believe trades right now will be taken from an expiry perspective.
Well, as we discussed, the range has been narrowing, but the key ingredient is 10,700 level, which is the option pain level for this particular expiry so far. If you look at even today's data, we saw incremental in 10,700 puts. So primarily, it looks like the writers are still confident about this particular level to be held on. So I think the bias is clearly positive until unless this level is held on. On the higher side, it has been facing resistance at around 10,800, 810. That is the level above which the markets could unleash momentum. But as of now, I think the range is very much clear. On the lower side, 10,700 remains a very critical support, and on the higher side, we need a firm closing about say 10,800 or 10,790 on a consistent basis for the markets to eject from this particular consolidation.
Okay, well, Amar, how about you? What are your closing thoughts for today and what we can expect going into the next few sessions?
I would say that the market is clearly displaying consolidation, and also I would say a balance between the bulls and the bears, because on the downside, Nifty is very strongly supported around 10,670, 10,700 zone, but on the upside again 10,800, 830, that's acting as a very strong resistance zone. So clearly reflects that there is a tussle, and also that's evenly poised right now. And also if I look at the weekly and the long-term charts, that clearly reflects that there is some significant decline in the bullish momentum which was earlier there. And looking at the short-term charts also clearly show that it's a trendless market, so one needs to watch out for these levels.
All right, guys, so with that, we'll let you go on that one. Amar as well as Sacchitanand, thanks so much for joining us and taking us through your views as well as solving some of your queries, the ones at least the ones which we've taken through the course of the show. But with that, it's a wrap up on the day's action, but lots more lined up, so stay tuned on the Bloomberg Quint, and we'll keep bringing you more.